Okay, welcome back everyone. In the second part, we are going to work through two questions. The first question is going to focus on the accounting equation, and the second one is going to focus on VAT. So what I'm going to do is we're going to work through the question, and I'm going to show you what do you need to see when you actually do a question in a test, in an exam, and how to identify the information that you need to record. Okay, so the most important thing when you start a question is to go look at what is required from you. Now, the reason this is important is this helps you when you go through all that information that they provide, find out what is relevant and what is irrelevant. Okay, if you do not know what they've asked you, you would not know what type of information will be relevant or not. So let's start with the required. So the first thing they've asked you here is to analyze each of the above transactions. So the above transactions are these 5, and complete the table as follows. So they want you to complete the table below. Then they've provided an example. We paid 200 Rand for our telephone account. So here your example is your numbers example. Then we debited telephone account, we credited bank, and then assets is a negative 200, owner's equity is a negative 200. Okay, so what they want you to do is they want you to complete the accounting equation, but they also want you to indicate what account is being debited or credited. Now let's quickly read what the additional information also says. Show the double entry debit and credit general ledger names, as well as the effect on the accounting equation. Ensure that you use a plus and a minus sign to show the effect on the equation, as marks will be allocated for these. Now, why you have to show the positive and negative if you omitted? We do not necessarily know if you understand whether it increased or decreased a specific account. So that is why they specifically ask for it. And then they say round to the nearest rand. So amounts where there are decimals, we're going to round it up to the closest rand. Okay, let's quickly see. That was the only question. Okay, so let's read through the information and see what information was relevant. Willow Traders is a nursery in Diepkloof. It is owned by Violet, who is studying part-time at Rosebank College. Willow Traders uses the perpetual inventory system to record its inventory. Now we said perpetual inventory, we take the purchases to the assets account, so inventory. Okay, so this is very important. If you missed that, you could have potentially taken it to the purchases account as opposed to the inventory account. Then they tell you we've got a markup is 20% on cost on all goods sold. Okay, so that means if the markup is on cost, our cost would be 100%. Our markup percentage would be 20%. And our sales price percentage would be 120%. Now, if you did not read that information, you would have potentially done 80 over 100 instead of 100 over 120 when you calculate the cost of sales. Now let's look at the different transactions. So the first transaction says the owner contributed a delivery vehicle valued 200,000. So the owner gave us a delivery vehicle valued at 200,000. Okay, so the first thing we know is we received a vehicle, which is an asset. Okay, so that's going to increase by 200K. The owner gave us that vehicle. So we know when an owner puts something into the business, that is seen as capital, which is owner's equity, which will also increase by 200K. Okay. But now the question is, will the vehicles be debited or credited? Now we know assets, if we think debt-like, Then at debit, expenses, assets, and drawings. So we know debit vehicle, which means we will credit capital. Okay, so that is the first transaction. Would look like that. So let me quickly just share that first slide. Okay, so the first transaction when we do our account, we would have debit vehicles, we would have credit capital, we would increase assets by 200,000, and we would increase owner's equity by 200,000. Okay, now something that I forgot to show you is here at the bottom when we look at the accounting equation. They did not actually tell you what the accounting equation is. So you would have to go complete it and say assets equal owner's equity plus liabilities to help you work out how to balance your accounting equation, okay? So that is something that you need to know, how the accounting equation works. Okay, let's read the second transaction. So 2.2 on the 4th, we purchase goods for cash. Okay, so very important, cash. It's not for credit. For 10,000 Rand and received a trade discount of 5%. Okay, so this purchase of goods is inventory that we've acquired. So we debit inventory. We bought it for cash, so we're going to credit bank. But now the value is what is the tricky part here. When you see trade discount, you need to work out the amount after trade discount. So the amount we account for is after the trade discount. So we only show what we actually pay for it. So that means your inventory amount is going to be the 10,000. We got a 5% discount, so we only paid 95% of the value, which means our inventory would be 9,500 and the bank will also be 9,500. Now, because we know when we credit bank, we are decreasing the bank because money is going out, but our inventory is increasing. So our inventory will be a positive. So when we do the disclosure now on our accounting equation, it will look as follows. So inventory is an asset account. So assets will increase by 9,500, but bank is also an asset account, and that will decrease with 9,500. So in this scenario, you have to show the two amounts separately. You have to show the positive and the negative separately in order to get the marks. If you leave it blank and you just put a zero effect in there, I do not know if you understand that it actually has an increase and a decrease, or whether you unsure that there's nothing happening in that account. So for this one specifically, if you did not show the positive and the negative in the same category, you would have lost either one or both of the marks. And the other thing is, we generally give a method mark for one of them. So let's say you forgot to do the trading inventory discount, you would receive one method mark for the amount that you showed. Okay. So before I move on to the next one, do you have any questions on trade discounts or the specific transaction that I've done? Are you guys okay with this transaction? Okay, great. So let's move on to the next one then. Okay, so if we look at the third transaction, we sold 10 pecanut trees at 50 Rand each for cash to Lily Rogers. Okay, so we sold it for cash. We did not sell it on credit. Okay. What is very important is because of the fact that we sold it. Now, with your perpetual inventory system, when we have a sale, we will have to do 2 transactions as opposed to 1. So the first transaction is our sales transaction, where we are going to debit the bank. So we know we are going to receive 10 times 50, which is 500 Rand. Okay, our bank is going to increase with 500 Rand, and we are going to credit our sales with 500 Rand. So sales will also increase by 500. Okay, the second transaction that you will have to do is the cost of sales. So now we have to move the inventory that we dispose of to cost of sales. So we know we're going to debit cost of sales and we are going to credit inventory. But now remember, this value will be at the cost of what those goods cost me. So it will be the 500 Rand multiply with the 100. So I want the cost before my profit margin over 120. Okay. Now if you multiply the 500 times 100 over 120, you get 417 Rand. Okay, so cost of sales goes to owner's equity. But because it is money that is going out, it decreases owner's equity, whereas inventory goes to assets and it will also decrease the assets. Bank is also an asset account, and sales also goes to owner's equity, but because our profit is increasing, it will increase our owner's equity. And that is how you would account for the sale using the perpetual inventory system. If it was the periodic inventory system, this second entry would not be there. Okay, we would only have the first one. Okay, so let's quickly look at the slide again. So this is what your entry would look like. You would debit bank, you would credit sales with the 500, would increase your assets, 500 would increase your owner's equity. You would debit the cost of sales, you would credit the inventory, and we will decrease the assets with 417 Rand, and we will decrease owner's equity with 417. So what we in effect did is we only accounted now for the profit that we made on the sale of that asset by doing these 2 transactions. Okay, any questions on this transaction? Any questions? Are you guys okay with this transaction, or do you have any questions for me? So to answer, yes, if it's the periodic inventory system, we would only have the first entry, which is the sales entry. We would not show the second entry because of the fact that when we purchased the inventory, we took it to the purchaser's account, which is a cost of sales, or which is owner's equity account, the expense account. So we would not be required to do the second entry. The second entry is only on the perpetual inventory system. Any other questions? Okay, then I'm going to move on to the next transaction. So on the 15th, we've paid a local newspaper. We paid 300 Rand cash. Okay. For an advert in a local newspaper. Okay, now in this question, it seems that everything was done in cash, but in your test, there will be both cash and credit. Okay, so we paid cash for it. So the first entry that we will have is we are going to debit the expense account, but now we have to determine what is the expense account. So the expense account is for advertising. Okay, this forms part of owner's equity. Now remember, if we've got an expense, it decreases our owner's equity with the 300 Rand. And because we paid cash for it, we are going to credit our bank account with a negative 300. Okay, so we're going to reduce the bank account as well. Okay, so we're debiting advertising and we're crediting the bank in this scenario. Okay, so another thing we would have allowed is if you said advertisement expenses, then we would have also given it because of the fact that not everyone used advertising as their account name. Okay, and this is what that transaction would look like. Then the last transaction is Violet took roses. Okay, so let me just move this transaction there so we can just see what's in here. Violet took a rose tree as a birthday present for her sister. Okay, now remember Violet is the owner. She took a rose tree for her sister and these are sold at 75 Rand each. When the owner takes something for their own personal use, this is called drawings. Okay? And this impacts your owner's equity. Owner's equity. But what was very important to note here is that this is the sales price. However, if the owner takes something, an owner will take it at the cost price and not at the sales price. So I will need to convert that sales price into a cost price when I do this transaction. Okay, so this transaction would be, I would debit drawings. If we think debt click, drawings is being debited, which is part of owner's equity. Now, owner's equity will be decreased when I take something out of the business. But now I have to determine what is the value. So I know it's 75 Rand. I know I want to know what the original cost is over 120. So let's quickly work it out. So 75 times 100 divided by 120 is 62.5. So 62 Rand 50 cents, but they said you have to round it up, so it's 63 Rand. And then I'm going to credit my inventory also with the 63 Rand. So my inventory will decrease and my drawings will decrease my owner's equity. Okay, the reason I did not account for VAT in this scenario is because of the fact that they said VAT can be ignored on all transactions. Okay, so that's why VAT was not accounted for in these transactions. Okay, let's quickly see then if we do the last entry on here, what it would look like. it would look as follows. You would debit your drawings account, you would credit your inventory, so your asset column would be a negative 63 Rand and your owner's equity would be a negative. Now, if I look at my accounting equation, the debit side or the asset equals the owner's equity, so I know I've actually balanced it. Okay, so this is how you would do question 2. Do you guys have any questions on the accounting equation question? Do you have any questions on question 2? Okay, so Tatu, you are not always supposed to round up to the nearest rand. They need to specifically indicate in the question to round up to the nearest rand. Otherwise, you would round up to the second decimal, so to the nearest cent. Okay, so that is a very good question. We don't always round up to the nearest rand. In some of the questions, they do expect you to do the cents. But let's say, for example, with the markup percentage, there were commas behind the percentage. We will then make provision for a rounding error there if your answer is not exactly 100% the same. Okay, any other questions? Anyone else have a question on the accounting equation that we've done?